How do you plan for estimated taxes if you have income that you earn irregularly, or you have times when you're earning more money and times when you earn less money? How do you plan for those estimated taxes in those situations? Well, I've got a super simple solution I'll go through. Then, and if you set it up all the way, it can really automate this whole process, and your savings come in automatically. So first, let's talk about how exactly the mechanics behind it. First of all, we need a bank account, separate bank account that is, for your taxes and to save money in there. I call it my tax savings account, right? Pretty creative there. And so I put money over there in my tax savings account to save for taxes. And that does a couple things. One, it just really separates the money so I don't have it lumped in with my other operating income, so I know how much money I've saved, and it's separated so I don't accidentally spend that money either on business expenses or paying myself through a salary or draw, right? It's physically separated so it doesn't get commingled. It's over there, it's its own place, and it's safe, protected from incidental spending on there. And I know how much we've got over there. So that's the first thing we need to do, is set up the separate bank account. Then we need to figure out how much do we put over there. And that's the hard part, right? Because we don't know what our taxes are going to be. We don't know that number for the full year until we prepare our tax return by April 15th of the next year. And so we don't know what it's going to be, and thinking about trying to calculate out tax rates off net income. I don't know what all my deductions are yet this quarter. There's a lot of anxiety out there, and I get it. But remember, these are quarterly estimated taxes. These aren't supposed to be exact numbers. They're just an estimate of the taxes you owe based on your income and expenses, rather, or both, I should say, that we have this year. And so it's just an estimate. So we just need to find an easy way to estimate it. And the best way to do it is just do it off the gross income. So the total money you've collected from your clients or customers, that total amount, we can estimate based on how much money we received, how much taxes we're going to pay, because we can probably estimate how much expenses we're going to have based on that income. I mean, there's certain fixed expenses, but there's a lot of expenses that are what we call variable, and they will increase with when your income goes up and down. But overall, we just have a good estimate based on last year. Right? How much gross income did we have last year, and how much taxes did we have to pay, and what was that percentage? Now, there's other things like other income you might have, and there's a lot of factors that can come into play. But as you can see overall, they're just getting an estimate. We can find a number of a percentage of our gross income that we can save over for taxes. That's going to be a good estimate. I've talked about, you can take last year's taxes if all you have is your actual business and calculate out the taxes paid divided by the gross income, and now you have a rough estimate of the percentage you should be using. Things change year to year, and so it's not going to be exact. So that is, most people, I try to start at a 15 to 20%, somewhere in that range. But it really depends on your business, what other income items you might have other than your business, but your business itself, how much margins you get. If you have really big margins, meaning you have a very little expenses for every dollar you collect on income, then you might need to have a higher percentage. If you have low margins, or you have a lot of expenses for every dollar you bring in, then maybe that number is lower. So you kind of need to figure out for yourself, but 15 to 20 is a great starting place for most people. It's going to get you most of the way there. If you want to be conservative, go higher. If you want to be aggressive, go lower. This is just an estimate, right? It's just an estimate designed to help you save money over here in your tax savings account and have it available to pay off for when you go. Now, how that still sounds kind of complicated, especially if you're getting a lot of different payments in periodically through the year to kind of do that all the time. So you don't have to do it every time you get money. You can do it on a weekly basis. You can do it on a twice a month basis, bi-weekly. However often you want to do it, that's fine. And what makes it even easier to do is actually creating a third bank account, which sounds kind of complicated. Now I've got 3 accounts to manage all that, but really you have the one main operating account you're going to work out of day to day. These other 2 you're going to look at, your tax account you're going to probably look at 4 times a year. Your income account, just whenever you need to transfer money, however often that's going to be, monthly, weekly, daily. Depending on your schedule, but it makes it easy because now you have an account where you're depositing all your income into. And so it's going to collect income until it's time to go and transfer that money out. So then you just have to look at what is today's balance. Am I using 15%? Okay, take 15% of whatever's in that account today, put it over my tax savings account, and the rest goes into my operating expense account. It's really easy. It's super simple. You take, just a couple minutes to run a quick math, make the transfers in your bank account, and then you're done. Now, if you use a bank like I do, which is Relay Financial, there's actually tools built into the platform that will do this automatically. They have rules you can set up that says every week on Friday, let's say, take the balance in my deposit account, automatically put 15% over in my tax savings account, and put the rest in my operating account. So it can automate the whole process. So if you use a bank that has that feature like Relay Bank has, I'm sure there's others out there. Relay Bank's just the one I personally use and familiar with. And you use that, then it's automated. You never even have to look at that deposit account, really. You only look at that tax savings account 4 times a year when you need to make a quarterly estimated tax payment. And then your operating expense is the same operating expense you have now that you use for your day-to-day expenses, paying yourself. All those business expenses are still run out of there the exact same way. So it makes it super simple, and you can really even automate it down. But even if you don't have a bank that does those automation features, it only takes but a few minutes once a week to go in and say, oh, I've got $2,000 in the account, put 15% of that over here, the rest goes over here, whatever percentage is going to be. That's the system that's in there. That percentage, like I said, you're going to really have to dig into your numbers and understand your business, or maybe work with your tax professional, or you can give me reach out to me. I'll help you kind of see what your business is and what might be a good percentage for you. So hope that's helpful. If you have any questions about the system, leave comments below. Otherwise, thanks for watching.